VIX is so low, there are no premiums in options. It is impossible to make money selling options right now. These are the common complaints we hear from traders everywhere. I do agree, but I decided to test this logic and take a deep dive into checking facts. In this video, we are going to compare the real numbers from a high VIX scenario to a low VIX scenario using Iron Condors. The results are quite inspiring. In the end, I will run a full simulation for Iron Condor in a low VIX scenario. So stay with me for a few minutes and it will be really worth. Welcome to another video by the Option School, and this is your friend Pradeep Singla. Facts: we all know that when VIX is high, premiums are high, and when VIX is low, premiums are low. As an option seller, we always want higher premiums before we enter the trade so that we can get a better decay. But what to do in case VIX is constantly in a lower range? What we are observing from last few weeks to few months is that okay, VIX is really low. So is it possible to trade strategies like Iron Condor? So what we said, okay, let us compare this. I will make two Iron Condors on the screen. One is high VIX Iron Condor, and let us compare with low VIX Iron Condor, and let's say what kind of difference in premium we are receiving. All of us know Iron Condor is a selling strategy where you are selling a call, selling a put, and then you are buying a protection call and you are buying a lower strike put also. So for this, to select a high VIX area, I went to TradingView. Here on TradingView, what we have done, we have selected two scenarios. One is in the beginning of the month of May, the VIX was pretty high. If you see here, the VIX was in the range of, you see, 18.85 in the month of beginning of the month. We have to see beginning of the month because we are talking about a monthly Iron Condor strategy. And another month is August, wherein on 1st of August, if I see, the VIX is very low. It is 11.927, right? So there is a huge difference of 18.85 to 11.925. In both the scenarios, we'll try to create Iron Condor with similar guidelines, and let us see what is the actual difference in the premium we are receiving. So what I have done, I have already plotted these Iron Condors on stock mock, and I'll show you. First is May trade when VIX is high. What I have done, I have sold a 30 delta call, which is 25,100. Market is at 24,429. First trading day of May at 9:16 in the morning. Mark, I have sold 25,100 call, purchased 25,200 call, just 100 points above it. Similarly, I have sold a put of 23,900, which is again approximately close to 30 delta, and I have purchased a 100 points lower protection by buying a put of 23,800. So this is the payoff diagram we have received. In this case, our maximum profit is the credit received. So credit received in this case is 3945. So the total, because the difference is 100 points, so total becomes 7500. So out of that, 3945 is what we have received, and 7500 minus 3945, 3555 is what can be my maximum loss. And this trade has a break even of from 23,847 to 25,153. So important is that okay, this is a high VIX scenario where the VIX was more than 18. In this case, we have received a premium of 3,945 by selling 30/30 delta call and put, and by buying 100 points protection in both the directions. We have got a good range of around 1,300 points, which is sufficiently high. Right. Now let us compare this with our 1st August trade when we saw that okay, volatility was very low. Let me again show you the screenshot of August trade. This is August trade when the VIX was low. Again, what I have done, I have market is at 24,723 this time. What I have done, I have sold 30 delta call, which is 25,200. I have purchased 100 points above call. I have sold 30 delta put, and I purchased 100 point below put as a protection. Surprisingly, I am still getting almost the same premium. The credit received is almost the same, rather 1 or 2 rupees extra compared to high VIX environment, wherein VIX was 18, and in this case VIX was around 11.8. So what is the catch? Again, if you see all the other parameters, it's okay. Required margin is almost similar, max loss, max profit is almost similar, and definitely you can say how this is possible. This is possible because there is another catch. In the previous slide, if I go back, what we saw, 23847, 25153, we got a break-even range of around 1300 points. In this case, because we are doing delta-based trading, although the premium received is same as 3952, but see this, the break-even width has reduced. Now it is less than 1000 points. In the previous case, when VIX was high, we got a very wide iron condor where the range was 1300 points. In this case, when VIX is low, we have received the premium, but it has affected our break even points. It has affected the width of the iron condor, which is obviously right. When VIX is low, premiums are low, so we need to come closer to the market to collect the same kind of credit, which is around 4000 rupees. And this 3952 is 3.9% of the profit, which is quite high, especially in low VIX environment. So what is the comparison? If I see in high VIX, I received 3945 in low VIX, and it's a substantial low, right? From 18 to 11.8, huge difference. But the width of the iron condor in high VIX was 1306 points, lower break even point minus upper break even point. In low VIX environment, this width got slightly reduced, not slightly reduced, it got reduced by almost 30 to 40%. So which brings us to next question, that okay, what we should be doing. You can always say, sir, obviously this becomes more risky, because even if the VIX is low, that doesn't mean that market will not move, which is very true. Market will move, and any width in case of iron condor which is less than 1000 to 1100 points is always giving you a feeling that okay, this trade may not be safe, because in a day or two only market moves by 300 400 points here and there. So when VIX is low, what we need to do, let us find that out. So in low VIX plan, we need to decide whether we want range or premium. In this example, when I have done a delta based trading, I am very clear that okay, we received the same premium, but I know that VIX is low. So I should focus more on the range rather than on the premium. So let me explain what I'm trying to say. I'll say I still want a range of at least 1200 1300 points, even if the premium received is less. So in the same trade, what I have done, I have shifted my call and put by 100 points. All the calls are shifted by 100 points up, 25 3 to 20 25 400. So earlier it was 25 200 300, now it is 300 400. In this case, I have shifted puts down by 100 points. So 24 300, 24 200. These are not now 30 30 delta, obviously it is less than that. So what effect it has brought in, instead of receiving around 3900, now I am receiving only 3200, which is okay. But the good thing is I have still received 3200 rupees, which is 3.3% possible profit, and my break even range has now expanded to almost 1100 points. So if I have to choose that okay, do you want more credit or do you want more width, I will definitely choose width, and I will forego a little bit of credit. Instead of 3900, I'm okay with 3200. 600 700 doesn't make a difference, because ultimately you are not going to take home all the money. Ultimately, it's not possible that you take 100% of the profit. So even if you're getting 2%, 2.5% kind of a profit, that is great. And in this case, since we have expanded the trade, required margin has slightly reduced, and overall percentage profit is still 3.2%. So in lower VIX also, what a trader can do is he can still maintain a wider range. And what are the benefits of maintaining the wider range? I will tell you, and I will also run a simulation on this trade, that okay, how this trade worked out, whether this trade worked out or not, and what are the benefits of keeping a lower credit and a wider range. We will definitely check this trade in the simulator also. But before that, let me see what are the final thoughts. So Iron Condor can be a good strategy in lower wick scenario also. It gives you decent protection and very good returns. When it comes to choosing between better premium or better width, I will always say it is safer to start with better width. At a later stage, depending upon where the market moves, we can do some adjustments to gain more premium also. Even with better width, we are getting sufficient premium. 3.3% is a very decent premium. Better width also gives us better adjustment opportunities and space to adjust. Suppose in case market is falling, we can bring down our call spread. If market is rising, we can bring up our put spread. That will reduce the width, but that will definitely increase more credit and it will give us more space. Obviously, for any strategy, adjustments are key to success. So if proper adjustments are there and you start with a decent space available, things can work wonderfully well even in a low VIX environment. And let us now see how this trade works in a simulator. So this is the trade we had selected and this is on 1st August, obviously a low VIX start. But what we have done, we have taken a higher width. So let's see quickly how this trade panned out. End of day, okay, this is okay. Let me quickly take you through the trade. Nowhere so far we have seen any range breakout. So market was well within. This is very close to you see breaking the range, but let's see. Next day, okay. Next day, 15th August was a holiday. Okay, 18th August. Already the trade is giving me 1.5% and not much, no adjustment required at all so far. I was looking for adjustment. Let's see. Okay, 25th August is already giving me 2887, almost 80 to 90% of max profit. I should be squaring off the trade. But even if I take it till end, let us see. On expiry, ultimately it is giving me 3210, almost the whole money. So because the width was very high, so we are not required to do any adjustment and we made our profits. This is the lowest weeks environment what we have seen in the market and Iron Condor. So hopefully this makes it very clear that okay, even in low VIX environment, strategies like Iron Condor can be extremely useful. Can we do something different in this Iron Condor strategy? Let me know in the comments below. If you have any other ideas, let us share that knowledge and let's see, can we do some other better adjustments in Iron Condor in a low VIX environment? Please do like this video, subscribe to this channel and click the bell icon so that you are getting notifications. We will be coming up with many new videos in next few days. Thank you.